Hello guys and welcome to our 11th Wyckoff class. Now, I'm not gonna, spend once again a lot of time making Wyckoff jokes, so let's get right into today's class. So what we're learning about today is the fourth event on the Wyckoff theory, which is the test. Okay, and the primary test that we should pay attention to is the event that we call secondary test. All right, so the secondary test usually happens at the end of phase A, and which is the phase of stopping the previous trend, and it initiates the beginning of phase B, which is building that cause to make the price go up. All right, so the secondary test, it has some function. Okay, it's not just a random pattern that Wyckoff observed, and so he decided to write in his book that every range should be like that. Okay, so basically what the secondary test proves us is that the trend is now sideways, basically like we saw here. If this ends up being actually an accumulation, right, or it might be similar to what we saw back here. These tests here, for example, here we can see some tests here. All right, now not all of them are the secondary tests, all right, but they are generic tests, and we're gonna learn all about that today. So basically, you could try to trade this range, all right, and maybe you will be successful if you use, I don't know, grid bots or something. But usually, sideways markets are times to observe the market and stay on the sidelines, as I always like to say, just to sit on your hands, practice sitting on your hands. Now, I know that, in the context of Wyckoff, it might be a little awkward to say that, but yeah, sometimes it's good to just sit on your hands and observe the market. All right. So essentially, what it suggests us is that, both in a distribution like up here or an accumulation like down here, it suggests us that the aggressive sellers or the aggressive buyers, the guys that are buying or selling at market price, they are abandoning the market, right? And so everyone that was pushing that price lower or was pushing that price higher, they are gone, right? Or they are not interested anymore in staying in the market, all right? So there are some key features of a secondary test, and it can happen in many different ways. So if we look here at this diagram, we can see two examples of a secondary test in the context of an accumulation, right? So we have a secondary test of weakness, right? And we have a secondary test of strength. And Ruben points to us here that some authors, around the internet, if you go looking for Wyckoff books and whatnot, they might defend that the secondary test must be above the selling climax or, below the buying climax or something like that. But that is not necessary. As we've seen in the past, the market is not determined by a couple of random lines you put around here. It is flexible and the conditions change, all right? This is a lot of what I talked about in my price time series forecasting class here in the Crypto Garden channel. The structure, the underlying conditions, they change. And so, just keeping fixed, your thoughts fixed to a specific structure is not necessarily the best thing, right? It's not necessarily the best thing because many times what we will see is that the underlying conditions changed, and so you should update your patterns. And that's what I like about the Wyckoff theory, that we have very flexible patterns and we need to think about the underlying conditions, right? So when we are in weakness moments, then we can usually see that the secondary test, it usually happens below the selling climax, like right here, or if it is in strength, it will happen a lot above the selling climax here. Okay, now we can see a lot of elements, right? Just abandoning of market cells and whatnot. And well, the official secondary test might be the one that we see in phase A that determines the end of this, specific trend. Once we see the phase B beginning, the tests will usually happen between the range that is formed, between the secondary test and the selling climax in the automatic reaction. Okay, so it will be mostly in this range, and anything that goes below it, you should think about it. It might be just a trap. All right. Okay. Now, on the upper end, we can see some secondary tests. So for example, like right here, we see it labeled as an uptrust action, all right? And down here, we can see a secondary test as a sign of weakness, right? Well, now, when we see an accumulation or reaccumulation, we see this secondary tests on the upper end called upthrust actions. And when we see a distribution or redistribution structures, we'll label it as just upthrust. Okay, and we'll look a little bit more into that when we look at shaking and breakouts. All right. Now, this is just what I wanted to, make explicit, that the test can happen both to the downside and to the upside. But when we are talking about the secondary test, we are talking at something that happens around the range of the selling climax or the buying climax. All right. Now, Ruben points some, minor technicalities here, but this isn't the focus of this course, I think. Just to not get caught in the minor technicalities like this point must be above this point and this must be 2.5 times that. I don't think that is of any use. But when we see those structures and we see the market conditions that look like there is some kind of accumulation or distribution happening, then we can infer things like that. Okay. Secondary tests on the lower end. Now we can see some lower lows produced by the selling climax, or lower than the selling climax produced by the secondary tests. All right. And as we can see here, we have the uptrust actions above the automatic reaction, and we have like a minor sign of weakness here below the selling climax. Now, these can happen, okay? And we saw that back here. We saw, for example, a minor sign of weakness here, and basically a perfect spring later. And we'll look into those events later. All right, but just so you guys can see that it's usually not even in those grid lines. So don't be looking for that perfect grid line, and you should be looking for something a little bit more complex. All right. Now, the generic test. What is the main characteristics? What are the main characteristics of the generic tests? Okay, so two things that can happen in a generic test. So it usually happens around an area where there was a low volume in the market. So the volume, it might be now low, so it suggests a lack of interest. So if it is on the upside, it suggests a lack of selling interest. And if it is to the downside, it indicates a lack of buying interest. And if the volume is relatively high, that indicates that traders are still going into trades, and that means that they might be still going, pushing the price where it's going. So that's something to pay attention to, right? And if you want to trade that, again, Ruben points some things here. We'll look those, more into context when we get to the trading part. But just so you guys know, if you can pause and maybe read this part of the text, then you can maybe find some use in that. We will look at some volume spread analysis later on the Wyckoff 2.0 course, which will be exclusive to the Crypto Garden. But, maybe if you looked at yourself on the internet, you could find it, right? So now, where should you be looking for tests? So there are some events that can, cause a test. So first, there is a test after a shock. So when you see a big shock, so for example, when you see the market going into such a big upthrust here, so like here, we see the market, back in June, it went up, I don't know, 32% in a week. Then that usually indicates us, especially if it made a new higher high, that the probabilities that if we go down to test the bottom of this range are really high. Okay, so when we see a big shock in the trend, a big movement contrary to the previous trend, to the accumulation or the distribution, then that usually means that we will test one of the ends of that range. All right. Second, there is the test after the breakout. So during phase D, when we see the start of that trend movement within the range, so for example, phase D would be something like here, right? And we saw this minor test here of this trend. So we broke out, tested, this line here, which was around these highs here, a little bit lower, but you know, it's approximate, all right? As I've been always saying, you should not be looking for perfect reproductions of the Wyckoff theory patterns, right? It tested this zone and then it went up. So when we see a breakout test of that previous trend is surely a probable event to happen. And finally, a trend test. Now, again, Ruben points to us where you should place your stop loss, where you should place your take profit, technicals tools like Fibonacci projections. Again, I don't think that is particularly useful. And if you use that, you will probably not be very successful, right? And finally, the trend test. So if we see, something like this trend here being broken now, for this we don't have an explicit example, but sometimes what you'll see is like prices trending down with time, and then it breaks out, retests it, and goes up. So that is what Ruben is talking about here, right? Now, it doesn't necessarily have to be a trend line, but this is just, to give the idea. Sometimes when we are trending down in the accumulation distribution and we go above that downtrend, then usually a test of that is in order. Now, how does it appear on the chart? Now, we can look at some volume analysis, right? So as we can see here, we have like high volumes at the top of the range, which indicates a lot of selling pressure, right? And then when we see a retest of that, a lot of the selling pressure is gone, and boom, price goes down and a big volume candle. So when we see volume climbing down in those tests, is never a good indication, right? And again, this is basically the same thing but reversed for the accumulation here, right? Now, the difference between the secondary test and the generic tests, it's not that big of a difference, right? Essentially, they are the same action. So the whole goal of distribution or accumulation is for the market makers to buy for as low as they can buy and to sell for as high as they can sell. All right. And so with these ranges here, and just to shake out as many of those novice investors as possible. Right. And the difference is that while the secondary test is a specific event of the Wyckoff methodology, which has some connotations on the structure that we draw and the events that we expect next, the generic test can happen, all throughout the accumulation or distribution, right? So yeah, I think this has been enough for today. Next class, we'll talk about shaking out. And I'm sorry that last week you had no class because I was having my finals for my university. So I really didn't have the time. All right. So if you enjoyed, leave a like and subscribe to our channel because there is a lot coming. And if you want to sign up for exclusive content, newsletters, spreadsheets, and whatnot, you can sign up at thecryptogarden.io. So it's been nice to having you, and goodbye.